Okay, guys, it's loading. Thank you guys for being here. By the way, it's gonna be fun. All right, guys, we here. We are here. We are live. All right, let me click this. All right, y'all. So this is going to be really fun because literally it's like our Zoom sessions, but there's eyes watching us. There's people watching us, but it's our regular Zoom sessions. Good morning, everyone. Happy Saturday. It's 11 a.m. Eastern Standard Time here and partly cloudy in Brooklyn, but it's hot. It's hot. And this is study sessions. So for you guys that are here for the first time, we do study sessions a couple times a month, every Saturday. But because we have our new platform, YouTube, we decided let's do it live on YouTube so we can have everyone kind of chime in and be able to rewatch this. Because one of the biggest things everyone loves to say is, Tiff, is this recorded? Tiff, is this recorded? Tiff, you should record this. And I'm like, okay, guys, okay. So if you guys don't know who I am Tiffany, the founder of Modern Black Girl. And then we have Chinello to the left of me. Chinello is our community manager. And then we have all of our lovely modern girls here. So we wanted to bring some of the girls on live with us to kind of be the voice for you guys. So if you guys have any questions or anything, hopefully they can answer, they thinking like you and they ask the right questions. But we're also going to be tapping into the YouTube comments as well. And then we'll be able to go in there and yeah, it's going to be fun. How y'all feeling this morning?
Yeah. Feeling good.
Good.
Awesome. Me too.
Good.
It's a good day. It's a good day. So how was everyone's week in the market?
It was interesting.
Interesting? She's like,
Yeah, it was interesting.
you
But
know, no, go ahead. I'm sorry.
it happens, it happens. We're up, we're down, sometimes we're sideways, we just have to roll with the flow.
That is so true. Not every week is going to be like the best week ever,
Mhm.
So it's one of those things where, when we get a good week, we just got to capitalize on it and always just practice and backtrack. So that's why I really, really enjoy doing study sessions, because I think a lot of times when we go back and we look at everything, we're like, oh, okay. So this is why I should have did this, I should have did that. And then it kind of helps just tie everything together. So I am happy about today. And then how we're going to do this is I'm going to start off the first half doing picking the right option contract, right? So we're going to talk about how to pick an option contract, following Modern Black Girls teachings for short term as well as day trades. And then Chinello is going to jump right into just some practice things. We're going to talk about Roblox this week. We're going to talk about AT&T, and Cisco. So we're going to talk about all these things. It's going to be a lot of fun. So tell a friend to tell a friend to tell a friend that this is our new home every Saturday at 11 a.m. Eastern Standard Time. This was actually Chinello's idea. Chinello was like, hey, Tiff, so I have a suggestion. And I'm like, oh, God. No, I'm joking. Chinello's suggestions are great. And she's like, I think we should do like a study sessions to help the girls with entry and exits. And I'm like, that's perfect. But of course, I'm like, I'm so busy. I'm like, I don't know if I could have anything else on my plate. And then Chinello's like, I could do it. And I'm like, yes, she can. Absolutely. She is so good. And she's like, she knows MBG. Like, she knows. Okay. So when she said she wanted to do this, I said, absolutely. So it's going to be amazing to have her. So I'm only here for today, y'all. Okay. moving forward, you're gonna have Chanello, and then we'll have people, of course, stop in. We're always gonna have girls join us. Some of the communities come on with us, so that's gonna be great. So, y'all ready for this? We just jump right into it. We pull up some charts, get it going.
We ready.
We ready? Okay,
Let's
Chanella,
get it.
how y'all feeling? Chanella, how you feeling this morning?
I'm excited. I'm excited. I think we're going to learn a lot of great things this morning. So I'm excited. Everyone, grab your Thinkorswim, grab your Thinkorswim charts. You want to be looking at your charts at the same time and marking up your charts as we go. So it's going to be a great day.
Mm-hmm. Yes, I'm looking at the comments right now. She was like, oh my God, Chanello offers guidance on T3. Yes, y'all. So our scanner and tier 3 in our Discord. If you guys don't know, we have 3 tiers in our Discord. In that 3rd tier, Chanello guides the ladies, help give them good levels to look at, good companies, avoid the bad companies, and just guidance throughout this journey of day trading. Because believe it or not, day trading is definitely a journey, y'all. So, Chanello does an amazing job just guiding us through that. And yeah, it's going to be a really, 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 really great journey for us as we get into June. And June, y'all, is usually one of the best times in the market. Amber, you on mute, girl. I see the ball.
Yeah. I've been waiting for June. I'm ready. I finally got it. I'm ready.
Yes. June is definitely the best time in the market. And guys, because I'm getting better at YouTube, please like and comment on this video and tell a friend to subscribe because I be forgetting to say it, y'all. And they're like, Tiff, you don't watch YouTube videos? I'm like, I know, I was being the judge. But yes, please like this video as well as share it and subscribe, because this is how we are going to build our brand and get bigger and bigger and bigger. So guys, enough rambling. Believe it or not, in our private Zooms, I rambled this much in the beginning as well. And then we get into it. Do we have any church announcements, anything, any housekeeping, anything that we need to announce? Every Wednesday, of course, this is where we teach and we get into lessons. So that is every Wednesday, 8 p.m. Eastern Standard Time, right here on YouTube. And then, what else do we have going on? Our 1K to 100K class is coming up on the 31st. So if you guys haven't taken that class already, you can sign up on modernblackgirl.com and take that class. It's amazing. It goes over some of my strategies that I have discovered over the years to help compound and grow your money to 100K in a year. So it's an amazing strategy. We give you guys companies, we give you guys time, we give you guys plays, we give you guys a lot within that strategy class. So if you haven't taken it yet, you do have an opportunity to take it in May. And yeah, that's about it. Class pass, if you guys needed a class pass for semi-privates only, it's good for people that are new to the market. If you just want some private TLC in a small setting in classes, you can do that. All right, y'all, let's pull up these charts. Let's get this chart open. So as we mentioned before, what we're going to talk about this morning is going to be picking the right option contract. We're going to start that way, and we're going to look at not only swings, we're going to look at day trades as well, and a long term as well, so you can help identify how to pick that contract, because sometimes that can be a little challenging, right? Sometimes, we'll get in a trade and be like, damn, I wish I had time, or maybe I bought too much time. So what we're going to do today is help you guys pick that one. And for my scanner people as well, I'm going to also help you guys identify a play, right, that comes on the scanner that could be a really good swing, because that happens a lot, like CVS, Target. There's been some good things that's popped up on our scanner that could have been swing trades, but you probably, because you were handling it as day trade, you probably didn't really look at the 1 year, 1 day chart to say, wait, this is actually a really good swing. So we're going to talk a little bit about that today as well. All right, so let's pull up these charts. And we're going to clean this up a bit. Then another funny thing is, this was a week full of news. right? I feel like there was so much news that came out this week, and it was just like, oh my goodness, especially in the chip space. We got a lot of news in that space, and that was an interesting time, to say the least. Can you guys see my screen? Let's remove some of these lines because it's looking.
Yes, we can see it.
Awesome. All right, so yeah, I'm looking at all of this, and I'm like, let's start with the 1 year, 1 day. Okay, how do I make this private now that we're on YouTube? It doesn't matter. All right, so let's look at our 1 year, 1 day. And first we're gonna talk about a swing trade. So if you are new here and you don't know what a swing trade is, a swing trade is being able to stay in a trade more than a day. So if you are in a trade more than a day, then that is deemed a swing trade. All right. So we're gonna go over that right now. So off rip, I see something that catches my eye that we're gonna talk about. But first, of course, we always go in and apply our support and resistance lines. We're gonna go in and do that. Guys, I love this so much. I love this setup so much than the other. It feels like home, right? It doesn't feel like we got people watching. It just feels like, like we with our girls, we just charting, even though we got people watching. It just feels like we having a good old Saturday conversation. So I love this so much. All right, so let's go in. Let's go.
We graduated from Clubhouse. Look at us.
I graduated, y'all.
I know, started at Clubhouse, now we here.
Yes, exactly. Literally started from Clubhouse, now we here. But that's evolution of life. All right, so let's talk about a swing trade, guys. So some of the best swing trades are easy to identify once you have your support and resistance levels plotted. So as you can see, I went in and I plotted my support and resistance levels, at least from here, from August and so on. I didn't plot down here because we're not there. So all I'm focusing is on around the levels and areas that the stock is currently trading at. So if we look here, the move that I really want to talk about is going to be this trend here. All right, we're going to talk about this trend here and then explain to you guys how you could have caught this play. All right, so as you can see, we are able to identify that NVDA has been trading sideways since August. And then you see it moving sideways, we find a new level of support within support and resistance within our support and resistance lines, which we are able to identify here, which starts roughly around November. And then we move over and then we're here. So what I want to talk about is this. So because we are able to identify support and resistance levels, we also see that 50 SMA crossing over. This kind of helps us say, okay, how we can plan our trades. All right, so if you kind of look over, all right, this time when we had that 50 cross, it took a little bit, but essentially we got a little uptrend. Here, we didn't really get across. And then if you pull over here, on this really long trend, really long trend, I'm sure the 50 crossed back here and then you got this run. But here, once we were able to identify that 50 starting to cross over and we see that our support line is here and we know this is a key support line. We know this is a key support line because if you look at the other points, you can see that it stopped here multiple times, ample amount of time. So we know that this is a key level. So how do we catch this? Is our target is going to be from the start of the trend here, right, to here. So some may say, Tiff, but what happens to here? How come? I'm like, well, if you want to get these, this is gambling technically, right? Getting down here is a gamble. If you get it, amazing. But we don't necessarily start. There is nothing really here that is giving us that indication to keep on going. All right, so if we look right around here, all you would have to do to help pick your option contract is look to the left. All right, so we always say look to the left. Beyonce said it first, but I'm saying it a second. Okay. All right, we gotta look to the left always when you're doing a swing trade, even any trade. Anytime you're doing a trade, always look to the left. Looking to the left means look at historical data, right? This is historical data, so you're able to see everything that is happening there. okay? So someone said, why don't we use the 200-day moving average? Because the 200-day moving average is more for longer trends, right? Because it's tracking the movement of 200 days. So we're not looking to do it when we're doing a swing trade. We're not necessarily looking for that length of time. So we don't need a 200. And also a 50 is just as solid as a 200-day moving average. So that's why we use our 50, even for long terms, as a really good trend holder versus our 200. All right. So if we're at this point and our target is here, we need to look to the left. So when you look to the left, you can see that the chart has traded within that level. So what I would do is, if you, like, let's say if you have something like this where you're trading within one, you can always just like find that level where it is. So we're literally where that 50 is, you can just put a placeholder trend line here so you can count and see how long it took to get from here to here. All right, so in this case, we're just gonna count it. So we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days here. Never quite got there here at 10 days. Have 1, 2, 3 days here. Here, we didn't quite get there. We had 3 days here, but I still wanna count this because we can kind of gauge how much longer it would have taken to get here. So it took about 1, 2, 3, about 15 days here, 3 days here, 3 days here, and one more time, 1, 2, 3. About 10 days here. All right, so once you kind of get it, I like to average it out, or sometimes I might take the highest point and give me that as well. But in this case, it took roughly, I would say, using about 2 weeks as to gauge how long it really took. How did I get to 2 weeks? Because this took 3, this took 10, this took 3, this took 10, or roughly around 10 days. So if you look at it from that perspective, you can say, okay, I need to give myself about 2 weeks for this trend. All right. Because the worst thing you want to do when you're swinging a trade is you want to make sure that you have time. So giving yourself a little bit more time, like here, right? Or even here versus just doing this 1, 2, 3, it's a safety net, right? It's a better safety net than giving yourself a week. So always, guys, when we're picking a contract, we don't always, even though we counted 2 weeks, we never give ourselves 2 weeks. We need to add an additional week onto that. So we're gonna make this 3 weeks. All right, we make that 3 weeks, and then you'll be able to use that to identify, okay, you want a contract for 3 weeks. Another way that you can do this is you can always just go to trade and see which one has the best open interest. Because sometimes if you have an open, you might see within that 2 weeks, you might have better open interest than that 3 weeks. So if you want to do that, you can. So let's actually go back and see what that option chain was looking like. So let's go to 330. It broke on 331. So let's look at 331. All right. Yeah, March was one of them days, Jim. March was not the easiest time in the market. We going through it this year. They're not playing with us. All right, so this is March 31st. Why does this look like this? Maybe it wasn't March 31st. Maybe it was like the 1st or something. Okay, it wasn't the 1st, so it had to have been the 2nd. Was the market closed on that? I think it was. So let's do the 5th. All right, boom, perfect. All right, so let's see, like, if we were going to trade this today, let's actually go and look and see what that would look like. So we set about 2 to 3 weeks out. So this would be 2 weeks at April 16th. And we would be looking to do calls. Why is this like this? Okay, this is a little weird. Let me try to open this.
Tiff, is it the time maybe? Because it's like 9:13.
You are absolutely right. Thank you. You're absolutely right. That is exactly why. Thanks, Sophie. All right, so let's go ahead and let that load. How are you guys liking this YouTube setup? Do you guys like it? Thumbs up if you like it. Like if you like this. Hearts if you like this. All right, awesome. So yes, now this makes more sense. Okay, so we're looking at the open interest on April 23rd. So that would have been our 3-week mark, right? And we don't really see much going on here. And then we can look on April the 16th, you see a lot more happening here. So if you wanted to do that April 16th, because you do have more open interest here, then you absolutely can. All right, so let's go back. So that's the first half of this, right? After we're able to identify that, we need to identify a strike price, right? So another way we do the strike price is we want to do from where we're at. So this is around, I guess we're a day behind, but that's okay. Let's do right to the 50 SMA. So this is 530 and this is 593. Let's round that to 600. So 530, well, actually it's more like 540. So 540, 600, that's about 60 points, right? So what we want to do is we're not going to even, so it's 60 points to get from our 50 all the way to our target price, but we're not actually going to do 50. Okay, we're not going to do 60, my apologies. We're actually going to split that down the middle and do 30. The reason why we want to do 30 instead of actually going the full length is because we want our contracts to eventually be in the money, right? And if we get it right to the target, it's like, you know, we'll make money, but it'll be better if we split that in half and then go in that way. So if we do this and we go to the option chain, so we have 60, let's add 30 to the current price. So it's about 553. So let's call it 550 at 30, 580. All right. And look at that. That 580 has the most open interest. All right. So you can go ahead and just click that. It's pretty cheap too. If you look at it, it's only 575, which is pretty good price. Okay. All right. So that's a pretty good price. So you can go in and purchase some of that if you wanted to purchase two. Whenever, that's about $1,000. A lot of us, well, on an average, it's like 200. I mean, on the average, a lot of us use maybe 1,000 for trade or 500 per trade. So, all right, we have that. So let's just fast forward a bit. Let's go up about a week. Let's go to 515. All right, so if we go to 515, all right, so we entered right on this day here on 4/5. So 4/5, it's April the 15th. Let's look at our contract. All right, so we would have made some money, right? Our contract's ending on the 16th though, right? So our contract is ending on the 16th and this is the 15th. So this is the day, literally the day before our contract expired. We probably wouldn't want to extend it this long, right? We probably wouldn't want to go this long with that contract. Granted, it worked out in our favor, right? Because you can see that we're still profiting. And that's the thing, you can extend it, that you can let the contract go that far as long as we're still in that profiting space, which you could kind of see that come in. But another game plan in how you could do this, right? Because that April 16th, that contract is about to end. On this day, once we break that new resistance point, you can get another contract, right? So if you see like this bullish volume coming in strong like this, right? And your contract is short, get another contract on your confirmation candle, which would be this one. You see that? So, because remember, resistance, it broke it. We need 2 levels of confirmation, which would be here. And then you can go ahead and do it that way. Okay. So let's actually backtrack. I want to go back to the day that we would have got that confirmation. So let's go.
I have a question.
Yeah, of course. What's up?
And when you're talking about getting another contract, that would be with like a further out expiration date, right? Keeping the theta in mind. Yeah. Okay. Yeah.
And technically, as you can see, it worked out in our favor, right? I want to actually see on how much that contract was on 4/13. So let's go to 4/13, but let's go the end of 4/13, like the end of the day. So let's do, yeah, like literally right at the end of the day. All right. All right, so at this point, our profit would be, let's see. Could you not have chose a strike price to 540 and call it a day? If you wanted to get right at the money, sure. But you want to be able to get multiple contracts. This contract would have made you more money than the contract at the money, right? Because you have more of it, it would have made you more money than the one right at the money. All right, so we have it. So you've been at 7,900. So at this point, you could have took this profit, locked that in, okay, because lock that profit in, and then maybe once we pass this level, so like maybe midday, you can go in and buy another contract. If you feel like, okay, this trend is gonna continue going because you see the volume almost 3x. You see that, right? So, and it's bullish, you can say, okay, this trend is gonna keep on going. So if you need to go ahead and just plan another contract, you can. Does that make sense? You have a question, Amber?
Yeah, because the RSI is approaching like the level that's a little overextended, would that still be a good play, or is this like, would you see how high, because it's reaching a high of the 52-week, right?
Yeah, but you could still ride it out, right? Because all that bullish volume just came in like this, they're gonna keep that trend going. So what you would do is you would monitor the RSI very closely, all right? And also that's gonna also help you identify how long that next contract should be, right? Because at this point, we're at all-time highs. All right, Sophie, you have a question?
Yeah, I do. I just want to ask a question just for clarification.
Yeah.
So right now you just taught us how to pick a strike price based on like a long term, right?
No, this is a swing trade.
A swing trade? Okay, so but I noticed that you've counted how like the points between the support and the resistance.
Correct. Well, no, I didn't. I counted where the 50 is.
Okay, so from the 50 to the next resistance point.
Correct, within the support and resistance lines.
Okay, and then you counted, and then once you did that, you counted how many days it would take to reach that point.
An average.
An average. Okay, so then does counting how much the stock moves, like the average move, the stock makes within that day, does that not factor in here, or does it still do?
Not within that day, because within that day doesn't matter within the overall trend, right? Because within that day is going to give you the data for that day. You need to see the broader market. You need to see where this chart can go or where it's been before. So you can't look at just that one day. You have to look at the 1 year, 1 day to be able to get a full gist of where to go. How much points do you need? Where has it stopped before? A direction, because when we're trading, we always need to know a direction. We always need to know where we're going and then some. Does that make sense?
Yes.
Yeah.
Yeah. Sorta?
Yeah.
So, okay, so understand, right? I look at it like this. When you're planning a swing trade, you're planning to do a longer term trade, right? So it's kind of like you're going on vacation. You're going on vacation. You're planning your vacation for 7 days, 10 days. Are you only going to look at the weather for the day that you're buying the ticket?
No.
Right? You're going to look at, I need to see a 7-day, 10-day forecast. So I need to know if I need to dip out by Sunday because a hurricane or a tsunami or some bad rain is coming, I could plan ahead. Or, if the weather is good, maybe I need to extend my flight a little bit more. That is what this 1 year, 1 day chart represents, right? If you look at that 1 day, you only look at that weather for a day, that's not giving you a good indicator on where to go, how long you need, it's giving you just that day. So that's why you have to pull out and do it on the 1 year, 1 day.
Yeah, no, I mean, I understand that. I was saying that, so because everything lined up, because okay, we waited for that price to break above that 50 and everything else with the MAs was lining up. So you wouldn't necessarily have to count the candles within the year, 1 year, 1 day, or like various candles within the 1 year, 1 day to get an average move that the stock would make, because everything else was lining up where like your MA, like you were waiting for price to break above that 50 MA to give you that final confirmation.
Yes, but you still need to know where you're going or where you're going. So that's why you have to be able to calculate from where that 50 is to that support line. Because if you didn't have a direction or had a possibility on where we're going, you might buy something too low or too much, or your short price might be too extended or too short, you know? So you gotta have to have a gauge on where you're going. Does that make sense?
Yeah.
Okay, we'll do one more. We'll do another example, and I think maybe it'll help tie things together for you a little bit.
Okay, no problem. Thank you, Tiff.
You're welcome. Hi, Saleha. Oh, wait, I think, was it Becky first? Okay, Becky and then Saleha.
Hey, so really quick question.
Yeah.
At the beginning, when we fast forward the play and it was 1 day before the contract expired, what about theta? Did theta play a factor in that time decay, being that we let the contract go all the way to the end?
Yeah, exactly. So this is why I decided to backtrack, because technically, right, in hindsight, we needed about 3 weeks, right? We needed around that 3 weeks, but we picked the 2 weeks standpoint because of the open interest, right? So at that point, when you see volume bullish like this coming in like this just lets you know, hey, I think this trend might extend a little bit longer. All right. In addition to that, you have a beautiful 50 crossing over your 9 and 13. That is a pretty good indicator that this trend is going to go for a long time. Well, go for a bit. Let me not say a long time. So that's why you kind of have to map it out that way.
Got it.
Makes sense? All right. Awesome. All right. I feel like I'd be butchering your name. Is it Sela or Saleha? Sela. Okay. I feel like I'm like, girl, I just be saying, I'm sorry.
You're fine. As long as I know who you're talking to, I'm easy. But hey, I had a question, and excuse me, I hope I'm not jumping ahead. But when you showed our chart, there was one red candle that came in, and then it went back up. So my question is, I feel like when we're in our swing trades, I have not gotten good at knowing when a trend is reversing and when a trend is just taking a little bit of a breath, you know, because and I'm not sure how to tell the difference.
Okay, that's a really good question. Let's jump ahead to that.
Okay.
Right. So here's the thing. The reason why because we were able to identify because we looked ahead, but in the moment we wouldn't know that happened, right? So let's say we came today, April 13th, off rip, your mind should be saying, I have to leave this trade, or I need to plan ahead for another one. Does that make sense? And with this bullish volume coming in, I'm saying, okay, they're going to try to push this trend a little bit longer, right? This is a good indicator that that trend is going to keep on going. So kind of similar to this, right? You had to see that super bearish volume coming in and it kind of continued. You have some bullish volume coming in, and then you see this coming in really high, okay? So first, I'm going to address your question, but first I just want to talk about something like this if this happens to you guys.
Okay.
So what I would do, right? Because remember, we had the 3 weeks, but we picked 2 based on open interest. What I would do in this case is, because if you look, probably the open interest probably came in anyways on the 23rd. Yeah, you see, but when we looked at it, it wasn't quite in yet, but it came in, right? Now you kind of see more open interest here. We can even pull out a little bit further on the April 30th. You have it there. April 7th, and kind of disappeared. All right, so they wasn't that confident. They like, oh, we got like 2 more weeks left in this trend. All right, from where we actually were. So in this case, once we're here, believe it or not, and we're hitting high in that RSI, and it's the 13th, our contract expires in 3 days. If you wanted to push to the 14th, around this time, you need to think about taking profit. right? And in this case, once you saw this, you're gonna probably take profit. Your mind is going to tell you to take profit. Does that make sense? Right? So let's kind of, and the hope is not to wait till the end of the day to take profit either. So let's look at our 5-day, 3-minute really quick. Yeah, you're not gonna wait, right? Because once you're ready to exit a trade, you need to now start looking intraday and see what's happening. So you're not gonna wait for this to come down. So let's probably right in around these lines. Once we kind of break that 50, you probably would have wanted to take profit anytime here. So let's go to like 957. Oh, not me hitting support. Okay, so 957. Lord, it's so hot. All right. So let's say along this line is coming and you're like, all right, I want to take my profit. If you pull out here, okay, this is how it would have looked. You know where you entered. You know that your target was here. So I always say, don't be greedy, right? I'd be like, don't be greedy, y'all. Take your profit, all right? For at least the long term.
Right.
Okay, so let's go in. Let's pull out here. So we will monitor. All right, so you would have had about 7,200. Everyone's happy. You invested $1,000 and you got 7,200. Like, okay, yes, dog. I don't know who dog that was, but yes, okay. All right, so this happened. So now you say, okay, how did I know this would have kept on going? To be honest, you don't know. You don't know. But what you do know is that your 50 is crossing, your 9 and 13 is coming, and you also have a level of support. So you have 3 indicators telling you, and I'm sure if I put the MACD on there, you'll see the MACD indicating that as well. So because you have all of that coming in, you don't necessarily need to worry too much, but you always want to mark where you entered, right? So in this case, we did that trade, but I want to go back to here because remember I said because our contract is expiring, we can go ahead and purchase another one. We're going to go back and we're going to purchase one on the 13th because it's the same level. It's the same thing in how we enter a trade, right? Support and resistance, moving average, value, MACD. This was the first confirmation. This is the entry. We just wait for it to break above. So roughly around here, to 613, we would have entered this trade. So let's go back to 413 and we can map that entry out. So I get that we got more of the move, but our contract was short at that time. So if we wanted to get something longer, then we need to be able to add in a little bit more things. And what I mean by that is we need to look at seasonality pieces. Is there news? Is there a catalyst if we want to get something extremely long? But in this case, for a swing, when you're doing a swing, you're going from level to level, right? And we're going to talk about all-time highs in a minute because I'm going to go ahead and put, we're going to use fibs. Fun, not fun. I'm starting to like them. They're growing on me, y'all. I know at first I was like, I don't know about no fibs, but they're growing on me. So at this point, we get that confirmation. All we need for it is to break above. So we're not going to wait till all of that happens. We can, oh, well, this is 9:45. So maybe you would have entered right here on this candle here. So this is at 9:45. All right, so around 9:45, we would have gotten in here for the swing. Okay. All right, so, all right, 9:45. All right, cool. Right here, we go in. We like where it is on a one day chart. We see it's above, it's perfect, we're happy. So you go in, now the contract for this one, right? We're already high on the RSI, right? But also we also can pull back and see how far we can get on the RSI. So we already have that gauge, we're already breaking, we're already at all-time highs. So what you can do is to kind of help gauge your next level. You can always throw fibs on here, okay? And it can help you get, okay, what is my next level going to be because we're at these all-time highs, All right. So what I would do is I would actually use this run right here, the pass run. All right, and gauge it down here. All right, and this is saying that that next target is going to be around that 672 level. Right, so you just measure the pass run from the high to the low, and then it'll help gauge that level. Also, you kind of see that 100% right where we're at now. So that kind of really gives me that gauge that, okay, this trend is probably not going to continue going. All right, so now with that, knowing that what we know, because we have that fibs here, you can tell from here to here, you're probably going to need like another week or two. Why? It's because you can literally at this point measure the average move per day for the candle and do the math and be able to tell, okay, that's how much time I need. Does that make sense? Does everyone get that when I say what I mean when I say that? Once you're at all-time highs. So okay, so once you're at all-time highs and you have fibs, get the average move per day for NVIDIA and do the calculations from here to here, and that will give you a good time frame. Same thing with strike, you're just gonna split it again. So at this point, we know we need about 2 weeks more. So we go in, we can get about 2 weeks. Let's do the strike price from the 620 to here. 620 to 670, that's about 50, do about 25 or 30. All right, so 25 to 30, you're gonna add that to that. So that's about 645 to 650 strike price. So we have 10 intervals. So we have there, but look, the 650 has 195. We can go ahead and purchase 2 of these. All right. So now we're gonna talk about that downtrend that happens literally immediately the next day. All right, so we're on the 13th, on the 14th.
Wait, I have a question about the number of contracts you did you purchase 2 just to see, like, you don't want to get a lot yet?
Yeah, because you know, I try to, when I do these trades, I try to use budgets that I think the average person would have, right? I think a lot of us, we use like 500 to 700 per trade.
Well, I was saying, what if we just like we just made like that 7,000, right? Or so will we use like the 3,500 to?
Absolutely, absolutely. If you want to go ahead and say, because you guys know our 1K to 100K, you know how we get over there. You know what we do. But to the person that maybe like, I want to keep that profit. If you just want to do something low, you can. But of course, if you want to, you can put as much as you want. It's up to your risk management, your money management. That helps determine how much you want to put in there.
Because I know sometimes you did say sometimes you buy a couple contracts because you don't know what the move is going to look like yet. I was wondering if this is one of those instances, but you're just saying you just want to stay under 1,000 for like the average budget.
Yeah, just for the average budget. You guys, I if it was me and I saw this trade with this volume, I would put a lot more money in here. All right, so but let's talk about this. All right, so we come in at this point, let's look at our profit. So at that point with our NVIDIA contracts, oh, we actually would have been down by morning. All right, so by the morning, we would have been down on our contract. All right, because we see here, we see it starting to come down. All right, let's pull that up. Actually, I want to look at the 5-day 3-minute and see the actual price action. All right, so we got in roughly around here. So the profit, so pretty much by open, that profit was gone. Realistically, if you pull back out, that $300 loss, that's a big chunk of money right there, right? But then you also have to understand what you're trading. So we put 1,400 in, that 36, that's what, I don't know why this doesn't give me the percentage here, but I think that's roughly, let me do 350 there. That's about 25%. So we're already at our 25% mark off rip when we open. So this is what you do. If you pull out, you always have a decision to make. If you pull out, you understand that 9 and 13 trend is coming in. You also understand your 50 is here. This is when you have to make a decision, because technically this is signaling an uptrend. But technically, was our target. We entered the new trade to catch more of the run up. But we also know we have here, we have all these things confirming more of an uptrend. You can look at this like, hey, people are just going to take their profits from the run. Or you can look at this like, okay, maybe it's time for me to go ahead and take my profit. So everything is up to you, right? But let's say you decided you wanted to keep going. Let's go by middle of the day. Middle of the day, still pretty down. Actually, let's go. Let's go and see what your loss would look like. $6.12. So now you're at 50%, completely gone. All right. Again, this is up to you on what you would do. You could take that profit here, right? Understanding that the run could be over. Or you can look at what your indicators are telling you in your support line and understand you have time on your hands. It is really up to you on what you should do. Because believe it or not, how I would handle this trade, once I started seeing that downtrend coming in at open, if we pull out and look at a 1 year, 1 day, I see it moving sideways. I probably would stay put until I got really, and seeing what it would do, because you're already down 30% on open and we're already moving sideways. We're able to identify that and we're close to the end of the day. You can say, hey, let me look at the grandiose scam of things and pulling out and looking at the full scape, or you can take your profit. But again, 1 year, 1 day is still just signaling people are probably just taking their profit. You're high on the R side. Everything's about decisions when it comes to the market, right? You have more up telling you that this trend is going to keep going versus it's going to end. Does that make sense? When you look at the risk to reward ratio. So even though you're down right now, let's go to the end of the day. Let's go to like 15. It came down hard, right? So you would have been upset at this point.
Yep.
You would have.
I would have just logged out and hoped for the best.
Right. I would have been sick.
Listen, Tiff, I tell you, I feel like by the time I make the decision to get out, I've lost so much. I'm like, oh, well, 50-50, let's just see what happens.
Right.
Just throw it up.
And I'm like,
it's like, you know what? Let me just go ahead and just whatever. But understand at this point, you have time on your hands.
mm-hmm.
Yeah, we do, for it to turn around.
You have time on your hands because this is just the first day. You also have your support line here.
Mm-hmm.
13 and you're 50. If you pull out on the chart, we did start to break down. Immediately, I'm plotting my support and resistance on my 5-day, 3-minute chart. Okay. You got to go ahead and start plotting that support and resistance on your chart, because at this point you're in money management, risk management, seeing what's happening. What am I going to do? What are we going to do within this trade? But you also have to understand how NVDA trades. NVDA is very volatile. All right. NVIDIA will wipe your account out real quick. It's like Amazon in a way.
I know.
Yeah, Amazon will wipe your chart out, wipe your money out in a second, right? But you have to understand that's how these companies like this trade.
Mm-hmm.
So at this point, again, you have a decision to make. I'm not leaving this trade, right? I'm not going to leave this trade based on what my 1 year, 1 day is saying. It's still signaling a stronger downtrend, all right? So we're here. That downtrend is coming. Do you guys understand though why I would not leave this trade?
Well, I think so. You said you had your moving average lines. You said you had your resistance line. And was there one more thing? that you?
The positioning of the 9, 13, and the 50. Oh, that was it. You said moving
That
on.
crossover is coming in, and I have time.
Right. And that when the 50 crosses over, that typically signals an uptrend when you're above it already. Gotcha.
And we have more bullish volume coming in. And I want people to understand this is different from a leap contract going down to the gutter. Because some maybe be like, well, my leaps was down 80, 70, 30, 80%. I'm like, that's different though. All right. When you have such a long leap, when you have those long leaps coming down like that, right? What that is signaling, it's going to take a lot more for you to get back to where you need. And most likely this is a bigger trend. It might be news. It may be the overall market, right? That's different. Might be a sector rotation. There's a lot of things that are happening when you have your long-term going down versus this is just a swing trade. This is people simply taking their profits.
Mm-hmm.
There's a difference. So I just wanted to let people know that. All right. So let's keep going. So the next day comes in, let's go to the 15th. You get your uptrend. All right. You get your uptrend, everyone's happy. Remember, our target when we put the fibs was like 672. I removed it, but it was 672 was our target. So that comes in. Let's go back the next day. Let's go to 619. Okay. Oop, hold on. Okay. So we get here to our 648 the following day. The next candle comes in bullish. Again, decisions to make, right? Let's go back to 616 at the end of the day. So you have that uptrend coming in. Always remember where you entered your trade. You entered here. So remember, I like to use the circle to kind of just circle the area. It's a little messed up circle to gauge where you're at. So if you entered here, you got that downtrend, you hit that high of 648. Pull out, do we have any resistance or anything? No, we're hitting all-time highs at this point. You have another downtrend coming in here. At this point, you don't necessarily have to worry too much, but understand you did get rejected at that 648 level. So you have this downtrend coming in. You can monitor where you're at. You're still making up for that downtrend, right? You made your money back. Once you see that downtrend coming in, depending on where your contract is, you should totally take your profit, right? You should probably take your profit and leave that trade. All right. Where we're entering and where we're at, it's pulling back down. I would take some of my profit right around this point. Because remember, this is our target and we're starting to pull down. So we're not getting that continuation that we're looking for. Rashida, question.
So mine's kind of two-part, and I guess you'll probably talk more about this one at the end, but how do you deal with the psychology of that? Because once I saw that little red, I probably wouldn't have slept that night, one. And then two, the line, I guess, I feel like those two red days are kind of similar in terms of volume. So I was just wondering, like, what would be the difference between those 2 days? Like, what about the second day would tell you, like, okay, it's time for me to sell?
Because this is, because the trend is still trending up bullish, right? So the volume being low value it's not something you necessarily have to worry about too much. The reason why I'm more so worried is just my contract based on what the chart is doing, right? And my profit and loss and the time piece. So it's only 2 days, granted, difference from here to here. But you can see, if you look at where your RSI is, it kind of rejected again at that same level on the RSI as well. So once it hit that point, it rejected again. I'm already in a deficit. It hit my target and we're coming back down again. You have to look from here to here. For it to bounce, it's probably going to take maybe 2 days. Do you see that? It would take probably 2 days for it to bounce, for it to keep going. And then within that 2 days, all right, it's going to be the 20th. My contract ends on the 23rd. Do you understand now? My contract,
Yes.
my contract ends on the 23rd. It's probably going to take 2 days, if it does come down, to bounce off that 9 and 13. And then to rally back up with theta, knowing how this works. Do you understand how you're putting all these different equations into play? You have to look at these things.
Yeah.
That's where that risk and reward. My life. Girl, the robots took over. Oh, the robots took over. Rashida, I'm gonna have to mute you, my love. I think she's driving. Oh, hold on. Okay. The robots took over our computer. Okay. Okay, so again, you just have to look at the ratio aspect. No, Rashida, you still sound like a robot, girl. You gotta stay on mute, girl. We gotta put you back. We gotta put you. We gotta put you back. Okay. Oh, I haven't been reading the chat the whole time. Chill. I'm gonna go back. Okay. So guys, this is a really good example because I love this example because literally it's how you look at things as a swing trade. I always say that you have to look at things as an investigative journalist. You have to look left, you got to look right. You got to see what's going on, your risk and reward, what makes sense, what am I going to do, how much time do I have, right? If we're not, because if we continued going up a little bit more, then I'd feel better, but we didn't. We're starting to come down. I'm going to go ahead and take my 121 loss and chop up the deuces, right? Because I don't have, for me to get back here, to bounce, that's 2 days. And then after that, I have maybe 2 or 3 days left on my contract for me to keep on going. And I entered here. Does that make sense?
Yep.
Perfect sense.
Always look at everything. Look at everything that is going on. Look to the left, look to the right. Always understand, where did I enter? What's my risk and reward? Because then you'll start to make smarter decisions versus saying, oh, let me wait it out. It's like, okay, what is the ratio? What is the likelihood?
Right.
Right. And always, I'm sorry, Tim, always remember we were already down 600. So I'm at 100. I'm going to take that loss and run.
Exactly. Because remember, we anticipated an uptrend.
Right.
Already understood that this was our target, right? This is where the chart at this 592, the chart likes to run back at this point. Okay. So once you get that move, you keep going. And then at this point, let's see what happens. I'm just going to go to the 22nd. We come right back down. Like you would have been crying.
Yep.
You would have been in tears. You'd be like, Tiffany, I don't know what to do. Modern Black girls, sisters, I need your help, y'all. Give me some, I need your help, y'all. That would have been in general chat and lessons learned, like, y'all, like, I'm trying, y'all. I'm studying every day. I'm going back to the E classes.
Paper trade, time out.
I'm
Back to
taking a
paper
break.
trade.
We be cuter than that though. We be coming back crying cuter than that though, Tiff.
Friendly. I'm joking. But
You're not playing though. No.
When is the next class?
Well, you know that's some of y'all. But because sometimes when you look at things, we're very hopeful people as Black women. We're very hopeful. We're very optimistic, believe it or not.
Yep.
We want the best. We do. And sometimes we got to start mapping things out. Like, wait, hold on. And that is the best part about doing swing trade. It's looking at that ratio. Because sometimes, certain things, like, okay, let me take half. Let me keep going. Let me add more. With this trend signaling, hey, we're going to keep on going. It did keep on going. Now, it didn't keep on going forever, but it kept on going. All right. So analyzing your movement and analyzing where you entered and analyzing your bounce points and your bounce areas is going to be important. All right. All right. So that was good. Let's do one more swing trade. Let's do HD. Oh God, look at the time going, y'all. Lord of mercy. Time be going. Okay, let's talk about HD real quick because this was super major. All right, this is super major. And believe it or not, if you look, a lot of your charts are starting to are going to act like HD. If you look at Apple's back at that sideways action. If we look at Amazon is still in that sideways action. Now, don't tell me, don't say I never told you guys nothing. All right? All right? Don't say I never told you nothing. Misfit. Misfit broke out a bit. Misfit broke out. But a lot of companies are moving sideways. Okay? So one of those things that we need to do is that plan for that breakout. HD is a perfect example of that. HD was moving sideways for look how long, y'all. HD moved sideways from August. Sorry. Okay, moved sideways from August all the way here. I know we're going a little bit over time, and I know I got to get the day trades, and I know we got to do some practice, but I feel like this is important. Should I keep going? Because we might go a little bit over 1 o'clock. I don't want us to, but it was important. What y'all want to do? Should we just we keep this for later or
no, keep going?
No, keep going. Keep going.
We need these gems.
Okay. I just want to make sure because I feel like we might go a little bit over 1 o'clock, but we'll try to keep it short. I'm gonna go quick. So we're here, right? We've been moving sideways. All right. This is important. This is important because if you see the sideways action that's happening here, you see the past run. This is Home Depot. Investors are waiting to enter this stock, right? Investors are waiting to enter this stock because if you look at just how it fell, how it moved, people have been waiting to buy it. And it ran like hell, right? So how would you place something that's at all-time highs? Well, you can use fibs again, or you can measure the past run. So if you measure the past run, right? It's so hot in my apartment. Oh my goodness. Okay, so if we go here, hold on, it's not that. We're gonna go here. Yo, the comments are funny. We ain't got nowhere to go. Y'all, I got place to go. What's up, honey? No, but so you measure the past run, so you can go here, all the way down. All right, you kind of get a gauge on where you want to go or where we should go with fibs. Or you can map it out like, I'm going to plan for a longer run based on how long this has been consolidated. All right, This consolidated for a while. So you can do two things. You can use the fibs to help gauge where you think you're going to go, or you can just measure the last time, the consolidation point to the last high right here, and use that to gauge how long you want it to go for the next one. So in this case, I can already see it took 2 months here for that run. So if you want to give yourself 2 months or 3 months or 2 months and 2 weeks, you can. All right. So some may say, okay, Tiff, all-time highs. How do I pick a strike price? Well, measure literally the same run. How much did it take to do from here to here? Because we're going to use this past run to help gauge for the following run. So you can literally just do the average, how long. So let's do this quick. So it's about 290 rounding, 240, 290, 40, that's about 50, 50, 25. Use 25 for your strike price, right? Based on the past run. And then you give yourself about 2 to 3 months, and there you go. All right. So literally, and if you see, this is easy. I don't have to really explain this to you guys, I hope, right? It rolled the 9 and 13, found consolidation, ran up again, pulled back to the 9. At this point, you take profit, right? You guys get that? Ooh, hold on. Hold on, wait a minute. Y'all thought I was finished, okay. So if you look here, easy, ride 9 and 13, found consolidation. No need to go anywhere because we're sitting there. Consolidation broke out again, rallied up, hit a high, pulled down right into the 9 and 13, did not sit. The moment market opened this day, you take profit. Make sense? Or even here, you take profit. Any of these, you could have taken profit, right? Any of these, you could have took profit. Okay. Wouldn't you stack contracts again like you did in NVDA, given there was a resistance point high up at this point? So this is a little different, Liz, because the volume wasn't really that much higher like it was in NVIDIA, right? The volume didn't give me that much of a gauge that it was going to continue running for a long time. So this is why I probably wouldn't. I probably would just, and then my contract is a lot longer, right? Because the difference between that NVIDIA is that my contract was also short, right? My contract ended on the 16th, and I did 2 weeks instead of 3 weeks versus this. I have almost 3 months, and we're only in a month and a half. Well, almost 2 months. So it's different in that regard. All right. So we do that, and then we keep going. All right. Let's do a day trade real quick. Let's do some day trades. Let's talk about TGT. Because when I was looking back and I was like, why didn't the girls do this swing? I was like, what's Discovery? I said, hold on. The Discovery play, I said, why didn't the girls stay? I'm like, they just, like, why didn't they stay in the trade? I was confused. You guys see that I still got it. Yeah. And I was like, why did they, there was no reason. Look at this thing. This was the day it went crazy, right? So a lot of us entered, but it's riding that 9 and 13 down, right? We got one green, but we didn't go anywhere. There was no need to go anywhere in this trade. Once we broke below that 50, you don't gotta go nowhere. All right, but let's focus on Target in particular. Target, same thing, we got the indicator here, and it's been riding ever since. So if we look at the 1 year, 1 day, how we would enter this trade, we got the indication here. All right. We got the indicator here. We probably would have entered the trade roughly around here, around this 948, this 945, 948 level, because we're still, actually, no, we wouldn't lie. Oh wait, we wouldn't have this resistant point, so yes, we would. I'm like, lies. No, but we totally would, because we don't have that resistant point. So here, our scanner was going off. The scanner went crazy this day. At 948, you could have entered this trade. Yo, Kristen said every time I hear TGC, I hear Tank. The group. Do you guys remember that group? And it's so funny because me too. Because every time I see TG, I be like TG, yeah, TG, from my favorite song. I love their group. I wish they come back. Anywho, sidebar. You enter here, ride that up. Okay, we started to pull back in to our 9 and 13. Depending on when you enter, we said we would enter here. Let me circle that point. And what day was this? That matters. This is the 19th. What day was that? The 19th was a Wednesday. Okay, we got a little bit of time. All right, so this comes in, rallies up, pulls down. Depending on what you want to do, you could take profit at any of these moments, but it came back down. At this point, we did break here, but you can look to the left and see that it's starting to work off here and created a resistance. Ooh. Created this resist. Ooh. Oh, I have the circle thing going here. Right around here, it created that support level, moved sideways on here. All right, rallied up, pulled back down, kept going. Then no need to leave here as well, because you can see that 9 and 13 came back in. All right, at this point, we break depending on how fast you leave that trade, right? Because remember, you entered here, so you still would be in profit. If you didn't catch this, right? If you didn't take profit here, and it came down like this came down pretty hard, you do not leave this trade. You got at this point, you can't leave this trade. You got to let it bounce, right? You're right at the support level. You see that? You got to let it bounce. So bounced, rallied, because you're still in profit. You get what I'm saying? It's not like you're losing. So you're here, it bounced again. It comes down depending on how fast you take profit, because you could have took profit here, anytime here. Bounced again. Let me talk about something. Anytime our earnings go off on our scanner, anything of that sort, you need to look at the 1 year, 1 day. Because at this point, if you pulled out, you would have saw, yo, this is a perfect setup. This is a perfect run, right? This is the perfect run. It's sitting on our 9 and 13. Let that baby roll. Move to the left and ride that wave. Wave, that was back in college. College days. Yeah, you gotta let it roll. So we're sitting on here and then we let it roll. So by the end of the day, I'm ready to set up my swing trade. All right. And the reason why it was beautiful, because look, it's not, we didn't even hit the RS. We're not even high on the RSI. You see that? Like, we're pulling up there, we get in there, but we're not quite there yet. So it was the perfect setup for a run to continue. All right, so understand that, guys. You want to just make sure you always look when something gets called on our scanner. Make sure you look at where it is. Okay. It's okay. This account ain't no money in this account, child. So I'm gonna try to figure out how to hide it. This is my training account, so there's nothing here. So they can try do whatever they want. You ain't gonna get nothing. All right, Sophie, you had a question?
Yes. So if it had broken both of those support and resistance that you had played, seeing that it also broke your 50, would you then have gotten out, or would you still recommend to go back to the one? Yeah, if price had broken both of those support and resistances, would you have gotten out, or would you still recommend go see what the 1 year, 1 day is doing, and if it's still holding on the 1 year, 1 day, maybe consider staying?
I would still hold. Well, wait, no, let me rephrase that. This is, because remember, we're handling this like a day trade. Okay. So at this point, I would have took profit. So this is about taking profit and getting back in with a different trade.
Okay.
Yeah, like double dipping, but
okay.
for a time frame.
Okay, got you.
Make sense?
Yep.
Yes. Selah. I think you're on mute there. I just put X on mute.
Okay, sorry. So I know when I got in that target trade, I was originally thinking about doing it as a day trade. And I know that one thing we want to be mindful of is just kind of doing what we said we were going to do. So when we enter something thinking that it's a day trade, and it's doing what we're supposed to, it's okay if it's kind of checking all the boxes to let it roll for a swing trade. Because I know sometimes, like if I'm doing it as a day trade, I may not necessarily be buying time, you know, or looking at as much things as I would have looked at if I had set it up for a swing trade.
So that's the thing. I don't do that. I will get a whole new contract.
Okay.
And it depends on what day it is too, right? And how long the move is, right? Because like if it's a Monday or Tuesday, no, actually, no, I wouldn't. You gotta, if you're gonna do a day trade, handle it like a day trade, a swing, handle it like swing. The reason why I say that is because remember, we have a equation that we have to do to get our strike price for a swing to make sure that we're getting the most out of our trade. So no.
Right. So in that case, if I had bought it as a day trade and then it's looking good and I said, oh, well, then it's best to handle that one like a day trade and then go back and plan for a swing trade.
Absolutely. Because we don't put all our money in one trade. So you got cash anyway. So make sense?
Yep, that makes sense.
Awesome. All right, guys. So that was this play. Let's do which was another one? Oh, the DISCA. That discovery one was so nice. It was beautiful. You're beautiful. It's true. I was so happy. This was a good one. Okay, so this happened on 5/14. All right, this was a beautiful play. All right, it was so beautiful. It was pretty. All right, this was like looking at a Birkin bag, seeing your husband, the man of your life, Bora Bora. Okay, the most beautiful places on earth. That's what this was in chart format. All right. So if you look at this downtrend, came in hot, coming in hot, right? A lot of us were on it because it was noted on our scanner. So we got in here. So I don't need to explain entry here. Chanello, you could get ready there. This is going to be my last one. And then Chanello's going to take over. And she has some questions. She has some charts that you guys sent to her, and she's going to go in and take over from there. But if you go here, you see there's no, literally, day trade, you stay in the trade. But if you look at the 1 year, 1 day, once we broke below this 50, okay, the next following day, you could get that swing trade. Or depending on your risk management, you could just stay in the trade. Of course, we'd like 2 levels of confirmation. But the way this fell and news, right? It was based on news. It was a lot going on. Because remember, if you're using the scan or anything of that sort, you always want to make sure that you look at the news. Oh, let me show you guys it. So when it comes on the scanner or anything, guys, even if you don't have a scanner, if you hear some news, you're on Twitter, whatever, something comes out with a company, you can always go to live news, right? And you can see what's happening here. You can see the news within the company and it'll tell you, right? And then that can help gauge how long you're going to stay, all right? So we got that move here. We have that downtrend coming in here. Yo, DISCA doesn't have a bottom, y'all. Oh, I'm lying. It does right here. You have to zoom in more so you can kind of see it, but it's along this level right here, around this 20, right? We're coming down to that 20. We know how to set this trade up, right? From where we are, so we would do the math from here to here, set the strike price from here to here, and then that's that trade. All right, that is that trade. Guys, this has been wonderful. I just wanted to go in and kind of pass the baton over to Chanello, that she is going to kill it, and she's going to focus primarily on entry and exits for day trades. Anything, like anytime you guys have anything in the week that you don't understand, so you're like, oh my gosh, I don't understand what went wrong here, you can always give it to Chanello or myself. We're gonna probably have a submission box or something soon, and you can submit that, and we will go through some of them here live, and we can talk about, okay, A, B, why did this happen? And I love these study sessions. And again, we're always going to bring girls on so you can ask questions. You can be the voice people. And Chinelo, my dear, I'm just going to pass it along to you.
Thanks, Tiff.
You're very welcome.
So hi guys, thank you guys for sticking around for the study sessions, and thank you all the girls that are joining us on the Zoom to have this study session. And shout out to Tiff for such an amazing, amazing session. I always learn something new whenever Tiff is teaching, so that's exciting. If you're new, go to our website at modernblackgirl.com to take a couple of classes on the website to get acquainted with some of the things we talked about today. We will always have sessions here on our YouTube on Wednesdays and Saturdays. So please like, subscribe, and then click the notification button so you can always get notified when we're here. All right. So we're gonna get started. If you need to take a little break to get some water, look at your charts, that's fine. We'll be going through think or swim charts. We'll be looking at a couple of setups we had this week. So just have your chart by your side and then follow me as I go, okay? So first of all, something we really talked about, and I know a couple girls here are in tier 3 in our Discord, and there's something we really talked about this week and we really tried to pay attention to was being very intentional about our entries and exits while we trade, and then journaling our trading experience, okay? And then essentially this is supposed to just help us grow, help us become more intentional about trading, help us become smarter traders and more strategic with our trades, okay? And then I know the girls really worked hard this week with entries and exits, so shout out to all of you. And I also wanted to add something you might have noticed this week. I don't know if everyone caught on to this, but then something I noticed this past week was so in the morning in tier 3 we look over Benzinga, so news on Benzinga, and we also look over 5 stocks to watch on Benzinga, right? And then something I noticed is, especially if those stocks have earnings, they tend to come up on the scanner as well. So that's kind of a cheat code for us, okay? So if you get those 5 stocks to watch on Benzinga, you can draw your support and resistance lines and keep them on a watch list in the morning, okay? So if we get, there's a 50% chance that they will pop up on the scanner as well. That's just confirming something you've already prepared for, and then you can plan your trades for the day, okay? So we're going to get started, and I have a question for my girls on the Zoom right now. So can anyone here tell me the things we look out for? So our confirmation where we want to enter a trade, and then our confirmations when we want to exit a trade. So there are a couple things we look out for when we want our entry confirmation and our exit confirmation, okay? And is there anyone that knows the answer? Okay, Amber.
Well, I know one of them is support and resistance. You want to look at that. You also want to look at the volume. And those are the only 2 I remember off the top of my head.
Okay. Is there anyone else that can remember another confirmation?
I would say besides support and resistance and volume, you want to look at your moving average lines as well.
Okay. All right. Okay, that's correct. So I'm going to give you the order in which we look at confirmations for entries. Okay. So we use support and resistance lines. Then we use the ME lines, so the 9, 13, and 50. Sela, did you want to say something before I go on?
I'm good.
Okay. And then we look at volume and we look at MACD. Okay, those are our entry confirmation for day trades. And then our exit confirmation, support and resistance, MA lines, RSI, and volume. All right, in that order. So so if y'all can see my screen clearly, we're going to look at a couple trades we took this week. And I also had some examples from the girls. So we're going to try to just track back and see what we did, where we could have entered and where we could have exited, and then using our entry confirmation and our exit confirmations as well. Okay, so our first ticker we'll be looking at is Cisco, and a lot of girls in tier 3 remember Cisco. Cisco was like, I think we got into Cisco on Thursday, so this is Thursday, right? And then Cisco was one of the trades we took this week that I was really bummed about, because I was looking, we talked about Cisco for like 1 minute, and then I was looking at something else and totally forgot about that. And then it gave us that confirmation we needed. But I think a couple of the girls were able to play Cisco, so that was amazing. Okay, so when the scanner called out Cisco, the scanner called out Cisco at about I want to say 9:50, 9:51 thereabout. And then what we usually do at MBG is that we first wait, we wait from 9:30 to 9:45. I know the market is very volatile and moving at that time, and sometimes there's that FOMO that wants to force you to trade as well. Just be yeah just be mindful, because not only is the market going in different directions, so usually you might not see a clear direction. The bid and ask also tends to be really wide at that time. Okay, there was a time I got into a Tesla trade at around 9:30, and I remember because it was going in my direction, but for like the first hour I couldn't make any profit because the bid and ask was really wide when I got in. Okay, so that's really why we say wait until after 9:45. By then you would see a clear direction, and then you'll be able to trade at that time. All right. So give me 1 second. Okay, so moving on from that, so we got into Cisco around this point, so at 10:09, and then some things we're looking out for was, first of all, if you look at the chart, we have this confirmation of entry right here. This is the first potential entry you could have taken at 9:45. Okay, but then some things I like to look out for, because this at this point, the reason why this is a good entry is because, first of all, you wait for the test of the 9 and 13, and then a bounce of the 9 and 13. Okay, so I usually tell the girls, if we're in an uptrend, instead of just jumping into the trade, you want to wait to see if you can track back a little bit to test the 9 and 13, which usually happens, and then jump off the 9 and 13 and continue that uptrend. Okay, but then here's another thing, and this is something I like to be mindful of. Usually I'm very weary about the support and resistance we form during those first 15 minutes. Okay, so I'm usually mindful of that. All right, so essentially, even though this was a potential entry, I might have waited. So if I was looking at Cisco at this point in time, I would be more comfortable entering when I see a clean break of this resistance. Okay, because you probably, I know this happened in AMD this past week, but then most times what happens is the stock rallies down and then tries to rally up again, and then it starts consolidating at this point. Okay, so it starts doing a sideway action. So what you want to see, what I wait to see, is a clean break of the high, so of the previous high from pre-market, and then from the first 15 minutes, and then that shows that, okay, we want to continue this uptrend. There's volume coming into the market to support this bullish move. Okay, so from there, so I think around this time, that was when we started hearing Cisco on the scanner, and then the girls called my attention to Cisco, and then we went to look at Cisco, and I think we're around this zone, this candle at 10:03. That was when we were looking at the chart, and then we're talking about this trade, and we said, okay, let's wait to see if we can bounce off the 9 and 13. Let's wait to see if we can test the 9 and 13 and bounce off the 9 and 13 to continue this uptrend. And then, just like clockwork, we came close to the 9 and 13, formed a little support, and then bounced off of that. So this could have been an entry. This let me get rid of this circle so you can see that clearly. This first green candle could have been an entry, or even better, a clean continuation of the uptrend. So whenever I see this bounce of the 9 and 13, and then I see a continuation of the bounce, so another candle opening opening at the close of the previous candle, that tells me that, okay, we're continuing this bullish move, and that, you know, that's a good entry for me. All right, does that make sense? Does anyone have any question before I keep going? All right, so so after that, so we're writing the 9 and 13, writing the 9 and 13. Now, if you're looking for another entry into you know, into this trade to continue the uptrend, I always tell the girls, wait for a bounce off the 9 and 13, and to see if we continue the uptrend after that. Okay, so for example, if you didn't get the chance to get in here, we tested the 9 and 13 again, and then bounced off the 9 and 13. So this is another potential entry, or even a chance for you to double down on this move. Okay, so this was a Thursday for CSCO. So that, you know, that covers our entries for CSCO. Now for our exits, this was a Thursday, and then I wasn't planning on swinging CSCO because I bought a weekly contract. So my contract was going to expire on Friday, right? So I'm definitely looking for a clean exit out of this. So first of all, we started forming resistance here. And then if you're curious as to how to draw support or resistance lines, you just look for where you have multiple candles wicking out in the same price zone. Okay, so you draw from week to week, you look for multiple candles wicking out in the same price zone, and then that, you know, that's essentially your support or resistance. The more candles that wick out in that zone, the stronger the support or resistance zone. Okay, so we were at this price point wicking out, and this is a Thursday. So for me, when I see that we're forming resistance here, we're moving sideways at this point, this is the first indication for me to take profit. Okay, so shave off some contracts. All right, and so from a psychological standpoint, there's nothing wrong in protecting your profit. There's nothing wrong in shaving off some contracts. I find that most people usually want to, you know, either make the most money on one trade. Okay, and I'm telling you, there's nothing wrong in protecting your trade by shaving off some contracts and then letting the rest run, or just, you know, taking your profit for the day and calling it a day. That's fine too. So this was my first exit, and then after this, I waited to see if we could bounce off the 9 and 13 and then continue the uptrend. But then after this candle tested the 9 and 13, it bounced off, and then this candle opened below. So if you look at this, we're forming a small support right here as well. Okay, so we're forming a small support right at that zone. And so the next thing I'm looking out for, right? So when we're trading, it's like a game. So you're looking at price action. You're looking at each candle to see what story it's telling you and what the next move is, right? It's for me, it's really interesting. So I see these two candles forming a support. I have a couple of decisions to make. I know for a fact that I'm not waiting to get to 50. Why? Because it's a Thursday, and then all of this will definitely take out of my profit. If this was a Monday or a Tuesday or even a Wednesday, that's fine. I could gamble it. But on a Thursday, I don't want to have to deal with all of this, right? So now I'm looking at these two candles, and then what I'm looking for here is, can we possibly bounce off this support and then continue this uptrend, even though we're now trading a little bit below the 9 and 13. Okay, so this next candle is very important for me. This next candle essentially tells me if I'm done with this trade or if I'm still waiting in the trade. And then what do we see? So the next candle opens below the close of the previous candle and starts trading below my support. That's it for me. I shaved off some contracts here, and then I shaved off the rest of my contracts on this trade when we started trading below my support at this point. All right, does that make sense? Let me see.
Definitely.
Yep.
Okay, awesome. I just wanted to be sure you guys are still here.
We
okay,
just
good.
unmute ourselves.
All right, that's good. So that's my mentality while I'm trading, especially day trading. I really enjoy day trading in this kind of market scenario because it forces me to sit down, settle down, and just pay attention to what's right in front of me. Okay, not be all over the place, disorganized. I literally have to clear my table, turn off my phone. Like, well, I put my phones on do not disturb, and I just watch what the chart is telling me. Okay, so we're going to look at Roblox as well, and that was I think Roblox was, we traded Roblox on Friday for tier 3.
Yeah.
Yes, we did. Okay.
Hey, Chanel, I tell you something funny. So I saw Roblox going up and I said, oh, this looks so good, but I know we're not supposed to jump in right away. So I did my paper trade and I jumped in at like 9:32 or something, like right at the start. And then it just went up, up, and up. And then I was like, okay, I'm gonna go ahead and do this in the real, my real thing. And of course my paper trade was beautiful. My real thing was okay. But I'm like, the one time I do what I'm supposed to do. The one
I know.
time.
No, I hear that. I hear that. But that's good that you tried it out on your paper trade first, just to be sure that you like how it's moving before testing it out with your real money. Okay. So for Roblox, for example, so Roblox started going off on the scanner at around 9:30. Literally when the market opened, Roblox started going off. But then we know not to trade between 9:30 and 9:45. Okay. Every time I try to break that rule, I get burned. I've gotten burned so many times. At this point, I've learned my lesson. Okay. So we were looking at Roblox for a good entry though. Okay. For me, my perfect entry is usually a bounce off the 9 and 13, right? But then you're not always going to get that. You're not, for example, Roblox was a good trade, but we did not get that bounce of the 9 and 13 until about 10:18, and then the trade was done by that time. Okay, so you're probably not always going to get that opportunity. However, we are day traders who learn to adapt. Okay, so I was looking at Roblox, and so for most of my trades, I took out the support and resistance lines so we can draw them together this session. Okay, so I looked at what what resistance and support lines we have from the first 15 minutes, and oh, and also I forgot to add this. Whenever you're about to day trade, before even trading the stock, you might want to go to the 1 year, 1 day, draw your support and resistance lines, and then come back on your 5-day, 3 minutes to draw some more support and resistance lines. Okay, so looking at Roblox now, from the first 15 minutes, we had some kind of resistance here at this point, and some kind of support here. Okay, so Roberta is going crazy about Roblox. I'm looking at Roblox. It's 9:39. We broke through our support. That's our resistance. So this line over here, that's amazing. That's what I like to see, that breakthrough. So I'm looking at the next candle to see if there's a continuation or if we test this this support line. So we come back to test this line, which is now support. And then for me, seeing this candle close above this support line. Okay, so this line was initially resistance for these candles, but then it's support for this candle right now. Okay, so seeing this candle right here, I'll take off the circle so it's clearer. Close above this support, this is an indication for me that we will be able to continue with this uptrend. Okay, so this candle right here was my entry. All right, so that was my entry for this trade. Okay, so now the thing with Roblox is it's very difficult because it doesn't test the 9 and 13. It's very difficult to find multiple entries into this trade. But then another trick I like to use is, and I don't use this a lot, but something I like to use is, first of all, if I see, so let's say you missed out on this entry and then this candle formed, okay, and you still see that we're going up on the 9 and 13, you can watch the next candle and see if we're opening at the close of this candle. 9 out of 10, if we open at the close of the previous candle and it's forming a bullish candle, we're going to continue this bullish trend. So you can enter at the open of this candle and then just ride it all the way. But then that's a really risky entry, okay? Because that increases your risk. That increases your risk to reward. So you have more. So as opposed to someone who entered here, you have more to risk if you're entering here, okay? But that's another potential entry. So we ride Roblox all the way at the top, and then from our 1 year, 1 day, okay, so this resistance line right now, if you girls remember from tier 3, this was a line we saw on our 1 year 1. This was all-time high. I wonder if it's this. You know what, I would just go to the 1 year 1 day, because we had all-time high. We were all there together watching that all-time high, and we broke the all-time high. So that was really exciting for Roblox. Let's see. Yes, we had all-time high at this point on Friday. So if we go back to the 5-day 3-minute, and just a rule of thumb, all-time high is usually a resistance point, okay? Because it's you know, it's the highest the ticker has gone. So if we're at all-time high, we need to essentially break through that high to create a new high. So all-time high was around this zone, okay? And then I remember we're all watching together and we said, okay, we could experience some turbulence at this point. All right. Now, today is a Friday. Okay, we're trading on a Friday. I won't be mad if you wanted to shave off some contracts at this point. Okay, when we got to all-time high and we're testing all-time high, I won't be mad if you wanted to shave some contracts. Remember, it's a Friday. Remember, all profit is good profit. There's nothing wrong in taking home the bag, some of the bag at this point. Okay, so we see this happen, but then here's the thing. So let me take that out so we can see clearly. So we get to all-time high, right? And we're essentially retesting that point. So here's how you think about this, right? So now that we're at all-time high, we could potentially go back to test the 9 and 13. Okay, so that's something a move we can anticipate, that we'll go back to test the 9 and 13 and potentially bounce off the 9 and 13. Okay, if you entered here or you entered here, coming down to test the 9 and 13 isn't terrible turbulence. It's not that bad, even though it's a Friday, because we're pretty close to the 9 and 13. Okay, so we're waiting to see, we're on this candle now, this red candle, and we're waiting to see if we test the 9 and 13 and bounce off the 9 and 13. So we do this candle in the middle, and then we continue this uptrend, and this is great. Okay, so we're still watching, and then we break through another resistance. I think this we break through all-time high. Okay, we break through, and it was great because we're all watching the breakthrough all-time high, and we're like, oh my god, we just broke through all-time high. So we break through all-time high, and then we get to this point. Okay, now mind you, there's no, if you were trading when it was at this point and you jump to the 1 year, 1 day or higher time frames, there was no resistance at this point. Okay, but then we see on the 5-day 3-minute that we start forming resistance at this point again. So let me get rid of this circle. This candle wicks out at this point. Okay, this other candle wicks out at this point as well. All right, so we can see that we're forming some resistance there. All right, now again, it's a Friday. I won't be mad if you saw this, okay, and thought, okay, we might have some sideways action here. Roblox is done running for the day. Let me go home with the bag and have a great weekend. All right, I won't be mad at that. So we do this, and then we break down to test the 9 and 13. Okay, so now you have a couple more decisions to make. Are we going to be able to bounce off the 9 and 13, or are we going to trade below the 9 and 13? Okay, and again, it's Friday. We're approaching, we're getting closer to noon. You want to be mindful of how long you stay in this trade so you don't lose money. Because if you got a weekly contract, it expires on Friday. It expires today. Okay, so we bounce off the 9 and 13, break through that resistance again, and start going sideways. We come back to test the 9 and 13. This, where I have circled right here, that was my final That was my final exit. Okay, so I had shaved off some contracts at this resistance point, but then this point was my final exit. All right, and that's because we formed some kind of, so there's a little, so this was initially resistance from the 1 year 1 day, and then we're forming support here. Okay, so see how this candle wicks out at this line here. So we're forming support, and then this candle starts to trade below that support. So the moment I saw this first of all, the moment I saw this candle open below this candle, I was like, I don't like that. But then once it started trading below my support, that was it for me. So I was done with this trade. Okay, and then if you look to the right to see what happened the rest of the day, we moved sideways and then we started trading below the 50. If you held onto this and then went through all of this on a Friday, it's not a cute look. Okay, that would erode your profit. That and theta would erode your profit quicker than, you can say Friday. All right. So before I go to the next, and does anyone have any questions? Okay. Well, does it make sense though?
Yes, I just learned a lot.
Yep.
Yeah, that was really good.
Okay.
And it
Good.
really helps when you break down the why behind, and just kind of your thinking and everything. So we appreciate that, Chanello.
No problem. No problem. Okay, so I want to look at I got a couple examples from the girls, and I want to quickly look at that. Quickly look at some of the entries and exits the girls had, and then we can analyze that together. Okay, so if you give me 1 second. Oh, gotcha. Okay. Let's make this full screen. Also, shout out to the girls for sharing your charts and circling your entries and exits. That was amazing. Thank you for sending in your charts. And we have a couple examples, so we'll just quickly look at them. This was an Amazon. So I think this person got into
That was me.
Okay, I saw this and I was like, yes, like this is clean. This was a good move and good entries. I think this was on Friday. And I'm going to assume that you entered Amazon here. So first of all, we had this move early in the day, so between 9:30 to 9:45, and that was a clean downtrend. Okay, so seeing this already tells you, all right, we might be going down. We might be going down today, but you can never be 100% sure, right? Because we don't control the market. The market tells us what it wants to do, and then we adapt, right? But then this is the best part for me. You waited for that test of the 9 and 13. For me, that's always my ideal entry. That test of the 9 and 13 and a bounce, just because first of all, you're trading close to the ME lines and you're trading close to the support or resistance line, right? So that the risk to reward ratio is always the best when you wait for that bounce of the 9 and 13. So we see that bounce of the 9 and 13, and then we trade all the way down to this point. Okay, so now there are a couple exits. The place you have circled, I'm not mad at that exit because it's a Friday and then we are at a support zone. So I see you drew a support line there. We're at a support zone. It's okay to take the bag and just call it a day. All right. Now, because you have such a good entry, you wouldn't have so the turbulence between where you are, the 9 and 13, and that resistance line at the top, it's not that bad. Okay, so if you wanted to shave off some contracts at your current exit and then wait to see how we do at that resistance zone, that's fine as well. And then you can hold up until where we trade a little bit above the 50. Okay, so where we trade above the 50 and break that resistance line there, that would be my final exit. Okay, so I will, because it's a Friday, it's smart to shave off some contracts when you get to a support zone, and then you can leave some to see how we test your resistance and see if we bounce off that, and then just shave off the rest, at this point. So this was a good trade. I saw it and I was like, this is good. I like that. So good job. And then this Walmart is another one, and I think Walmart was on Thursday, right? So again, I see your entry. You waited for the break of that 50. I like that. So for me, just because there's a lot of turbulence in the beginning, so market open between 9:30 to 9:45, I would be more, even if, so your entry is a good entry, but I'll be more apprehensive when we get to that market high, that resistance you have around 142, right? Just because that was the high between 9:30 to 9:45, so we might see some turbulence there. So usually what I tend to do is wait to see if you can break through that zone and then ride the uptrend. So your entry is not bad. It's a good entry, but then just to protect myself, I would have been more comfortable entering around that 142 area. Okay, where I'm currently circling, that's where I would have entered. All right. And then do you have a question?
Oh, I thought you were finished. You can keep going. I'll wait till you finish.
Oh, okay. And then so riding that all the way to the top, that's that's good. Now I see that resistance you have at that zone. So that huge red candle that breaks through the resistance, that's my first exit. Just because it's a strong candle breaking through that resistance zone. Now, if I don't get off there, if I see that other candle opening below the first candle, I'm definitely shaving off some contracts there. All right. And then yeah. So depending on your risk tolerance, I like your exit as well, because your exit waits for that break of the 9 and 13. But depending on your risk tolerance and how many contracts you have, you can wait to see if we bounce off the 9 and 13 as we eventually did, or wait to see if you bounce off the 50. But if this is a Thursday or Friday, I'm not waiting for all that turbulence. If it's a Monday, Wednesday, Tuesday, Wednesday, I could accommodate some of this, but on a Thursday or Friday, I don't like to put my contracts through that. Okay, but your entries and exits are really good. I like how you have the support lines on there. That's great. Okay, so now I'm moving on to the next chart. So this is plug. So I looked at this chart earlier, and I think the yellow is the entry and then the red is the exit. Okay. And so guys, so this is what I was talking about initially. Most times, what I tend to do is between 9:30 to 9:45, I draw a resistance line at the high and a support line at the low. So she has a support line at the low, but there's no resistance line at the high, or maybe it's this blue line right here. And then the reason I do that is because I noticed that sometimes, for example, look at what plug does between open and 11:30. We kind of trade in between, so we're moving sideways in between. Okay. And then sometimes even though we had a clean break of the 9, 13 and 50 around 10, we still traded in between. That's why I get very pensive about if we're able to break this resistance at 25.55, or if we're able to break down the support at 24.55. Okay. And so in a scenario like this, like, never be too eager to lose your money, never be too eager to get in a trade. So what I would do is I will set an alert at the top and I'll set an alert at the bottom. Okay. If my alert clicks at the bottom, that means we're breaking below the support from this morning, and we could potentially see a downtrend. If my alert goes off at the top, then we're breaking the support at we're breaking the resistance from this morning, and we can potentially see a continuation of the uptrend. Okay, so I see that this was your entry, and I see that this was your exit. Now I can understand why you entered at this point, at this red candle. The only thing is it looks like we broke through that resistance. Okay, you want to see another candle continuing this downtrend, another candle opening below the close of this candle. Okay, so this did not give you any confirmation, because this candle still traded in the zone, but then this candle broke below your resistance. So that's good. That's your first confirmation. What you want to see is another candle. If you had waited to see how this candle traded, you will see that it's trading back into that zone and not continuing the downtrend. Okay. However, what I would advise is draw your resistance line here, draw your support line, and then set your alerts and just wait. That way you avoid getting in the middle of all of this. So your alert goes off, your alert will probably go off at this point, and then you won't see a confirmation, and that's okay. You draw your line again and then set your alert again. Now, if your alert goes off at this point, all right, if your alert goes off at this point and then you see this candle, that's good. That's confirmation that, okay, we can continue this downtrend. So say you get in at this price point, because that's what I would probably have done, okay, in real time. I get in at this point to continue the downtrend with for plug, right? And so we're trading and I see this. Okay, I'm not scared of this. Wait, what day was this? Okay. Oh, this was a Friday. All right. Well, I might not be too scared of this just because we still have that resistance here. Okay, so I know we could go back to test this resistance. All right, and that's why I think trading close to a resistance point or your MA lines gives you the best risk to reward ratio, because you know, you can easily go back to test that resistance. So I know we could potentially come back to test this. So we're here, we're testing the resistance line, and then we're at this point, but then we're also close to the 50. All right, so we're not that far from the 50. So I'll also wait to see how we test the 50. Now, if we started trading above the 50, then this trade will be invalid for me. It just means we're going back to consolidate, right? But now we're testing the 50 and then we drop down and we continue this downtrend. Okay, so this would have been my entry. I would have had to deal with some of this turbulence, but that's fine because I have my resistance line here and I have my 50 MA here. Okay, and then I will continue this downtrend, and probably it's around 2 p.m. now, so I'll be looking to exit. Once I see this candle, I'm done. All right, because this is Friday and I don't want to be in this trade that long. All right, so going on to the next okay, so this SPCE, we're going to go over it together because I have my own chart set up for SPCE, and I'll show you what, you know, the entry and exit could have looked like, because I know we all traded SPCE together, and some people made money from that and some people didn't, so we'll go over that together. Okay, so AT&T, this was on a Tuesday. Okay, so let's see. AT&T, this, okay, so this entry, okay, because you had to sit through this turbulence and you did not have to. Okay, it's, you know, sometimes we have to sit through turbulence and that's okay, but then this one you did not have to, because what you could have done is, first of all, this is still trading. This is, well, 9:30. Yeah, this is still trading before 9:45. So again, from 9:30 to 9:45, let's just give the market a chance to decide where it wants to go. Because if you had waited till 9:45, you would have seen one, two. Also, I'm wondering if you were trying to play a call or a put with this. But if we had waited till 9:45, you would have seen 1, 2, 3, 4 candles form, and you would have noticed that we're going sideways. Okay, so what I would do is draw a resistance line at this bottom and then draw a support line at this top, set my alerts and wait. Okay, and then if you had done that, what you would have noticed is your alert will go off at this point. Okay, so it would go off at this point, but then when your alert goes off and then you come and look at it, you see that this candle still closed below your support line. Okay, so you're not interested in this. You set an alert again and you keep waiting. Now your alert will go off at this point as well. And then when you come back to look at it, you see that we broke through the 9 and 13. All right, so that's good. This is your first confirmation. We're waiting to see how the next candle trades. I see this candle opening above our close. That's an entry for me. So I enter and I write this. This is a Tuesday. Okay, so I write this all the way. I can take this turbulence because this is a Tuesday and my entry is right here. So we're good. We break the 50. That's amazing. So I know we'll keep going. So I write it. We test the 9 and 13. We close above. We bounce off the 9 and 13. Testing this 9 and 13 and bouncing off. That's another entry. If we're looking to double down or re-enter into this trade. Okay. So you test the 9 and 13, and then I can't see the rest of this chart. But then if we break below, so it looks like we're forming some kind of support here. If we break below, we're trading below the 9 and 13. If we start trading below the support that we're forming, depending on where the 50 is, this might be it for me. Okay, so I want to look at, okay, we still have, okay, so I think this is our last one, and I'm going to go over Virgin Galactic because I think this is also a similar trade. So I'll go over Virgin Galactic on my chart. And Roblox, okay, we already talked about Roblox. So for Roblox, this is not a bad entry, you know, as well. It's a higher risk to reward ratio, but it's not a bad entry. And then this is not a bad exit, only because this was a Friday. If it was a Monday to Wednesday, I'd say wait to see if we bounce off the 9 and 13 before exiting. Okay, so let's go back to my chart. I want to quickly go over Virgin Galactic and AT&T before we leave. All right. In the meantime, does anyone have any questions?
I do, Chanela. I would like to know, when we go over either of those, Virgin Galactic or AT&T, do you mind going over the contract?
Yes. Okay.
Thank you.
Thank you for reminding me, because I was gonna go over that. So here's the thing. I'm not crazy about, I don't get too technical or too complex with how I pick contracts for day trades. On Wednesday, Thursday, and Friday. Wednesday really depends on my mood, but on Thursday and Friday, I always stay at the money. I never go out of the money on Thursday and Friday. I have been burnt too many times to even look outside the money on Thursday and Friday. Literally. Okay. Yeah. I have scars from that experience. So Thursday and Friday, stay at the money. Okay. Monday, Tuesday, you can play outside the money, not too far off, but then you find that about 3 to 4 contracts, below, you see that there's a lot of open interest. Okay. Right. So let's look at next. What did? Okay, I don't. So let's say we're looking at AT&T, for example. Okay, and let's say this is a Monday. This is just a general example. Now, if it were Monday, I don't mind buying these contracts at 0.05 cents. I don't mind buying these or buying these. Okay, just because it's a Monday, I can play where we have more open interest. But if we're Friday, I don't care. If the open interest here was 10, I would buy at the money. Okay, I don't care. I mean, on Friday, the contracts are already cheap. Right. Okay, so on Friday, contracts are already cheap. So there's no need to go fishing for something out here. So Monday, Tuesday, you can use open interest as a guide for where you want to buy your contract. Wednesday, it's however you feel. On Wednesday, if the contracts are cheap, I will stay at the money. If they're not cheap, I will go out of the money. Okay. But on Thursday, Friday, never stay at the money. Never go out of the money. All right. Does that help?
Yes.
Awesome.
Thank you.
So yeah, if you were doing a swing trade, yeah, then you can look at the candles, do the math, try to figure out where you're going, all that jazz. But if it's a day trade, just keep it simple. Look at open interest on Monday, Tuesday. The larger the open interest, the better. Don't go too far off. Maybe go 2 to 3 strike prices out. On Wednesday, use the price of the contract as a guide. On Thursday, Friday, stay at the money. Don't go anywhere else. All right. Okay, let's look at AT&T. AT&T, that was a fun one. First of all, AT&T, I got burned on AT&T. Okay, so I lost money on AT&T, and that was because I wasn't following my own rule. Okay, and this is why I tell you guys that I like to pay attention to see if we can break through the high of the high we create between 9:30 to 9:45. Okay, so on AT&T, I think I might have had a support level here or resistance level here, and then I think my alert went up here, and then I saw this bounce off the 9 and 13, and I got into this trade here. Okay, so let me tell you why this is wrong before I tell you what I did with this. So first of all, for me, this was a wrong move because I should have been looking at this zone. I should have been looking at the high we created between 9:30 to 9:45 to see if we can comfortably break through that and then look for an entry. Okay, so what I should have had instead of this resistance line here. So I will take that out. What I should have had instead is a resistance line here at the high, and then another support line here at the low. And then just set my alerts here between these two zones and just wait. Okay, so I got in here. I saw this. When I saw this rejection, I was like, oh no. But I wanted to wait to see if we could bounce off the 9 and 13 and keep riding. Okay, so we broke below the 9 and 13 at this point, all right? But then I was waiting to see what the next candle will do. The next candle started trading below the 9 and 13. We started forming support at this zone. So this was my last line of and I think for this AT&T, this was Monday. Okay, so this was my last line of defense. For me, it was okay. We're forming support here. If we break below this support, I'd have no business being in this trade. At this point, I'm just praying for a miracle if I'm still in this trade. Okay, and that's the thing. Sometimes you could be, so whenever I'm trading, I don't look at my profit or loss or what's happening with my money, because that gets me emotional. If I'm losing money, I obviously will start making some drastic moves. So I close that. So I just do this. If you look at this, this is how I see how much money I have. I just simply close this, make my chart wider, and then focus on what information I'm getting. Okay, so we started trading below that zone, and then we broke through my support at this point. Once we did this, that was it for me. I was done trading AT&T, to the upside. But then another thing is, when this candle came down, my alert went off. So my alert for the downside went off, right? So that brought my attention back to AT&T, and I was like, okay, well, let's see if we'll have a move to the downside. All right, and we started forming support again. So we're moving sideways. So this happened, and I was waiting for confirmation. So we started moving sideways at this point. So I wanted to wait to see if we can get a clean downtrend. Now, if you had entered on this candle, I would not have been mad, because this candle shows continuation of this downtrend. Okay, so I waited, and then I saw this sideways action. So I set another alert for this zone. Once we broke down, and then see, this is the kind of candle I like to see, a healthy candle that shows that we're continuing this downtrend. So once I saw this candle, this was a go for me. Okay, so this was my entry into the trade. And then another interesting thing about AT&T, this trade, is, if the ladies can remember, the ladies from tier 3, so we looked at Benzinga this morning, and then we saw that AT&T and DISCA were merging, right? And then I'm going to show DISCA's chart real quick. But then the thing is, we got into a downtrend for DISCA like pretty early on, like around 9:45, and we rode that downtrend, right? So that's also like the psychological aspect. If you're trading DISCA to the downside, why are you looking to trade AT&T to the upside when they're both, it's the same news affecting both of them? Okay, so in hindsight, I thought about that, and I was like, okay, it did not make sense for me to be looking for an uptrend from a fundamental standpoint. It did not make sense for me to be looking for an uptrend for AT&T when DISCA, that's directly affected with the same news, was looking to trade to the downside. Okay, so just something to keep in mind. But back to actual technical stuff. So we got in here, and then we started riding this downtrend. There was no point where, because this is a Monday, any turbulence to the 50, we could have handled it. At this point, we were forming support, some kind of resistance here. I would be mad if you got out of this trade, because there was no reason to. Okay, we're forming resistance here, and that was okay. We just wanted to see what will happen after that. And we kept trading to the downside. We came back to test the 9 and 13. And then we see this. I understand that this candle can be scary, but you entered this trade at this point. Your risk to reward is so high. You deserve to give yourself a chance to test the 50. Okay. So we come up here, we don't get that close to the 50. We start breaking down all over again. And then this continues. All right. Now, hear me out. I never plan. So if you plan a day trade and it turns into a swing trade, that's amazing. That's great. But I never get into a trade anticipating that it's going to turn into a swing trade. That's how you get burnt, because you can never, because of the kind of market conditions we have, you can never predict what will happen pre-market. Okay. There was a time I entered QQQ for a call. And then I thought it was going to keep going up. And then pre-market, we gapped down. And then I went from being in profit to being in a total loss. So here's what I tend to do, okay? And again, it depends on, now, if you wanted to swing this contract, you could have gone to the 1 day, 1 year, look at the chart from a larger time frame, and then plan for that swing, okay? But then if you are still holding your contract, if these are your Monday contracts and you're looking to swing them, what I will do is I will shave off some contracts. So if I have 5 contracts, I will shave off about 3 contracts towards market close, and then let the rest play out, okay? So if anything happens pre-market, that's a risk I'm willing to take. And I've taken enough profit, so I'm comfortable if something happens and those contracts end up breaking even or turning into a loss. Does that make sense? So like, you don't want to play Russian roulette with your money, okay? You don't want to put all your money in an uncertain situation. Now, if you saw this, you went on the 1 day, 1 year, and you wanted to plan that swing trade, that's smart, okay? You can go and buy yourself enough time, buy yourself a contract at a good strike price and play that. But because we're planning on doing a day trade, okay, plan for a day trade. So it's okay to take out a couple contracts, 3 contracts if you have 5, 6 contracts if you have 10. Okay, take out a couple contracts and then let the rest ride, and just do what look at the 5 day, 3 minute the next day to see how things play out. Okay, so that was AT&T, and then let's quickly look at DISCA, because like I said, AT&T and DISCA, they had news that day. So this move that happened on DISCA, that was from news that day on AT&T. That was from news that day on Benzinga. And then the good thing is, the interesting thing was, if you traded AT&T and DISCA, you'd notice that you probably made more profit in AT&T than DISCA, even though DISCA had a cleaner move, just because there was more volume in AT&T. Okay, now, for this day, DISCA was actually my favorite, because DISCA gave us that kind of entry that I usually like. So a bounce off the 9 and 13. Okay. So I think the scanner was calling our attention to DISCA. I don't remember what time, but then ideally, once I see this bounce off the 9 and 13, this would be my initial entry, this candle right here. Now, if you missed this entry, okay, and this is what I explained to you guys earlier. If you miss this entry, if you see this candle trading below the close of this initial candle, that's another entry. Okay, that's another entry, and you just get into it. And the risk to reward is not that bad. So that's another entry. You get into it and you just ride the downtrend. So literally, we sat back, had a good time, and just watched this. Like it was such a clean run. We just watched DISCA run every time. So you saw with AT&T would come to test the 9 and 13, and then even trade above the 9 and 13, not DISCA. Every time DISCA came close to the 9 and 13, it would just cleanly bounce off and then keep riding that downtrend. Okay, so now the same thing applies. The 50 was really close, so there was no reason for you to get out of this trade, just because we're really close to the 50 and your risk to reward is really high. Okay, at this point, if you wanted to swing DISCA, that's fine. I would say, just because you probably have a week's contract and you were planning to do a day trade, if you want to buy some other contracts to get you more time, that's fine. If not, take off some money off the table and then you can let the rest run. All right. Okay. Does anyone have any questions before I do the final ticker for the day?
I do. Do you not worry about the consolidation period that DISCA was just doing, eating away at your reward?
I don't, because this was a Monday.
Okay.
Right. So this is, so
Right.
it's not, so whenever we consolidate, the main thing that plays at that at eating out your contract is data, right?
Right.
And so if you have more time on your contract, data is less less vicious than if you have no time. So a contract that expires on Friday but then purchased on Monday has less effects with data than a contract that was purchased on Friday that expires on Friday.
Right. Okay.
So just something to pay attention to. If it's a Monday, that's fine. On a Monday, you can take turbulence. On a Monday, you can take a little consolidation. That's okay, as long as things are still going in your direction. But on a Friday, I would have been out of DISCA a long time ago.
Got it. Yeah. Okay. Thank you.
Good question. All right, Virgin Galactic. This this was, what day was this? I think it was Thursday. Let me see if I can get to Thursday. Was it Thursday? No, I think it was this day. I think it was, yeah, Thursday. This is Thursday. Okay, Virgin Galactic. This was really interesting because I think we got into SPCE together, and it was a continuous battle of if we wanted to stay in or exit SPCE. And I get it. It's a Thursday and there's not a lot of turbulence we can take. Okay, so I understand that trading SPCE when it was doing all of this was uncomfortable. Okay, so this was our entry. All right, so again, we waited to see what market would do from the highs and the lows from the morning, and then we broke down at this point. Okay, so this was my resistance level from that morning session, and then we broke down at this point. I saw this breakdown, I was like, okay, I like that. And on the next candle, we're still trading below that resistance point, so that was an entry for me. Okay, so now we're riding SPCE, and we see this is not cute. I know this like multiple candles coming in with such bullish momentum on a Thursday. We don't like that. But then the reason I still stayed in this was because risk to reward is not that bad. Second of all, I wanted to see if we could bounce off the 9 and 13. Okay, so we got to the 9 and 13 and we broke above the 9 and 13. Okay, so I started getting weary at this point when this happened. So I wanted to see how the next candle trades, if we come back down or if we keep going up. This happened. This happened, and then I started getting pensive about this zone. Actually, hold on. Okay, so I started getting pensive about this zone. So I started looking for my next line of defense. Okay, because I wasn't going to wait for us to get to this 50, because this 50 is far and it's a Thursday. But then I also did not want to leave this trade if I did not have to. So I was looking for my next line of defense. And then for me, it was, okay, so this is my entry. If we trade up to this point, if we had this bullish run up to this point and we closed above, then I would definitely leave this trade. Okay, so I'm willing to risk a couple dollars or break even to see if we can trade up to this point. And the reason I have this line here is because if you look at these two candles over here, we have a little bit of resistance here. Okay, so yeah, so I was waiting to see how it would react at that zone. And then we came up to this point and then started moving sideways a little bit. Okay, so I drew another resistance line here and I said, okay, now my risk has changed. Okay, so instead of waiting for us to get up to this point, okay, because remember, it's a Thursday, all this move, all of this turbulence is eating on my contract. So instead of waiting for us to get up to this zone, I will now wait to see if we break above this zone. Since we're forming some kind of resistance here, if we break above this zone, then that's it. Okay, I'm done for the day. And so we do this, we start trading a little bit below and then we go back down. So we break down again. Okay. So I'm watching this. This was so uncomfortable to watch, guys. I'm not even going to lie. I'm watching this, and then we form some kind of support here. Okay. So I figured, all right. And this was similar to, I don't know if the girls remember from tier 3. We had a similar scenario in our target play. Okay. I think some girls were in a call for target, and then target started doing this sideways motion. And I said, okay, we have a resistance level here, and then we have a support level here. Okay. So it's decision time. We could break above this resistance, and then we'll be done with this trade. Okay. Because I mean, we're looking to go down. So we can break up. So this is a put. We could break above this resistance, and then that's it. Okay. We're done. We lost money or we broke even. That's fine. Or we could break below this support and then continue with this downtrend. So we just have to sit through this turbulence until the market tells us what it wants to do. Okay. And so we broke through this support. We're trading on the downside, right in the 9 and 13. And then this happened. So first of all, once we started trading at this zone and we started forming some kind of support here, I drew a line here. Okay. And I was like, all right, it's Thursday and SPCE is not giving what it's supposed to give. So I said, if we bounce off the support and start breaking towards the 9 and 13, I will shave off some contracts. Okay. So say I have 5 contracts, for example. The moment I see this, I shave off 3. And then I wait to see how we bounce off the 9 and 13. So we have this strong bullish candle, but then the 50 is right here. Okay, my entry is right here. The 50 is right here. All right, can you see that? So you still have enough room to, risk, to experience some turbulence. So I wait to see if we'll test the 50 and bounce, and we come close and bounce back to the downside. So I'm excited. I'm waiting to see if we can break down from the 9 and 13, break down through this support zone and continue the downtrend, but no. We bounce back, and then the moment we try to break through this 50, I close out all my contracts. I'm done for the day. All right. So I know SPCE wasn't really a clean move. It wasn't as exciting as most of the other trades we took during the week, but then, it's still part of how you learn how to trade. This is something that tends to happen with some of the tickers we trade. So you want to be really analytical with your candles. You want to look at your chart and pay attention to what the candles are telling you, and then not be impulsive as to how you trade, but then draw out your support and resistance lines. Look at where your MA lines are. Your MA lines are your soldiers. Okay, look at where they are. Get that information from the chart and then react to that. All right. Does anyone have any questions? Yeah, SPCE wasn't cute at all, but yeah, it was actually my worst. Actually, yeah, it was my worst this week. AT&T was going to be my worst this week because of that call, but then that put was so beautiful. Does anyone have any questions from what we've covered, or wants me to look at something else before we head out? Because this was our last chart for today.
Yeah, I actually did have a question regarding theta, something that Becky
Okay.
mentioned. She was asking about theta. Oh, so I didn't know that theta could count against you within the day. And so what difference does it make throughout the week? Like, I guess I'm asking is if let's say we're on a Monday, is theta counting against you throughout the day as well versus a Tuesday, Wednesday, and the Friday is pretty clear. I know, like after 12 Eastern, get out of it, especially if it's not going your way. But what about earlier in the week?
Okay, so let's say you buy a contract on Monday. Okay, so theta could be 0.01. Okay, so that would just be the percentage taken out of your contract at the end of the day, Monday. Okay, but then the thing is that theta grows geometrically over the week. So it's not, okay, on Tuesday it's 0.02. No, theta on Tuesday could be 0.03. On Wednesday it could be 0.04. On Thursday it could be 0.08. You know what I mean? So it's just because theta is kind of a sum total of your delta and your theta that gets added together, and then it increases every week. Okay, so if you buy a contract on Monday for the week, on Monday, Tuesday, Wednesday, you might not feel the effect of theta, but then if you hold that contract through Thursday and Friday, you definitely feel the effects. Okay, even sometimes if you let that contract sit up until the end, the contract will expire worthless. That's how bad theta is. So if you buy a contract on Monday, that's fine. You know, end of day Monday, that's fine. End of day Tuesday, not as bad. End of day Wednesday, not as bad. But Thursday, Friday, I'd be more worried about how theta might affect my contract. All right. Awesome. All right. So it doesn't look like we have any other questions. I thought this.
I have a question.
Okay.
So when you're doing a day trade, when you're doing a day trade, do you buy your contract? Do you buy your contract within that same week still, or do you go like at least like a week out?
The same week. So if I'm looking to day trade, for example, with SPCE on Friday, I don't know. So usually when you're day trading, it's usually based on technicals, right? So you never, there's no motivation to hold that contract out for a month or 2 weeks or more. Okay. Well, now when you plan a swing trade, that's different. You go in with the plan of wanting to hold that contract for a long period of time, not with day trades. For day trades, you just want to get the bag and keep it going. Okay. So when I day trade, I buy for that week. You know, I buy to expire that. Even on Friday, if I'm day trading, I buy a contract that will expire on Friday. Now, if I look at a setup, say I trade Apple on a Friday, for example, and Apple, you know, does this bullish run that breaks above the 50 and all the MA lines, and I look at Apple and I say, okay, we could potentially do a bullish run the rest of the month. What I would do is I would go and purchase more contracts at a farther out expiration date, and then that would be my swing trade. But then my day trade, I'll definitely close it out on Friday.
Okay.
Yeah. Awesome.
All right. Thank you.
All right. So this was great. I enjoyed just walking through my mindset as to how I day trade with all of you girls. For my tier 3 girls, we will continue with this the rest of next week. So I'm really excited. We'll still circle our entries, our exits, and keep journaling and being very intentional about how we trade. But thank you to and also what we're going to do on our Discord, and this is for everyone, we will have a list of topics. We'll have everyone suggest topics they want us to cover on our study sessions. We'll do a poll, and then we'll decide what we want to talk about next weekend. All right. But then have a great weekend, guys. Go out and enjoy the sun. It is nice out. If you have any questions, please reach out to us on our Discord. If none of this makes sense today, that's okay. We'll get you right. Go to modernblackgirl.com and take our beginner classes, join our Discord, and all the girls are always happy to help. Thank you for hopping our YouTube live today. We will see you next week. All right. Bye.